We've got the Trump-Xi meeting at G20 this week. We've also got continued Iran tensions and the threats of more sanctions. If you had to pinpoint which of those two outcomes and situations was more important to the macro stock market, which one would it be?
Well, you know, I would have said it was Trump and Xi and the G20 meeting and U.S.-China trade talks, although after last week, after the whole Iranian situation, the shooting down of the drones, the blowing up of the oil tankers, and now the suggestion by Trump that he's going to impose major new sanctions against Iran, I think today, tomorrow is going to be very important in terms of the Iranian story, because the Xi story doesn't happen until the end of the week, along with more economic data. So I think today and tomorrow is all going to be about what we hear the president say in terms of sanctions on Iran and what that really means, and then Iran's response. See what oil does, to see what energy does, and I think that's what's going to drive the markets right now.
But here's the irony, Kenny. I mean, oil prices have gone up, not only because of Iran sanctions, that's a big part of it, but there's other aspects that play it well. But isn't slightly higher oil prices actually a good thing for the macro equity markets? Because energy stocks have been in a bear market for a while. They have been the dogs, not only of the Dow, but of the entire market. Wouldn't a firming in the oil and gas space maybe help out the whole complex?
Sure. Listen, I think absolutely yes. Listen, and the weakness in energy over the last couple of months has provided a great opportunity for long-term or longer-term investors to get in. So seeing some strength in the energy markets and oil markets is good. What you don't want to see is a huge spike, right? You don't want to necessarily see it spike to $70 or $80 a barrel. Not that I'm saying it's going to go there at all. But look, it's in this trading range, right? Every time it gets down to 55 WTI, then the Saudis and Russia and OPEC, they start talking about what they're going to do to drive oil prices higher. Once it gets to 65, Trump comes out and starts tweeting about how we need oil lower. And so it's really stuck in this range. Certainly the tensions around the Mideast are going to offer it some support and actually help it to move higher. And the energy stocks do better than the overall market should start to also kind of find some support.
Well, by the way, 1 week from today, next Monday, might be the most contentious OPEC meeting in years because of everything that is going on with Iran and the tensions between their longtime adversary, Saudi Arabia. But, Kenny, here's the amazing thing. You've got reports that Iran is blowing up twin tankers, shooting down drones. You've got an explosion and a fire at the massive East Coast Philadelphia Energy Solutions refinery behind where I stand right now. And yet, oil prices are still only in the mid $57 range. That says that this is a market that is very well supplied.
Well, and I think it is well supplied, and I don't really think there's a shortage of oil, and I don't think that anyone should think, look, the U.S. is now, we're now the largest producer of oil. We're an exporter of oil now, and so therefore I don't necessarily think, I don't see the reason that oil should be at $80 or $85 a barrel, unless, of course, the Saudis and OPEC really start to cut production. But that being said, I think somewhere between $55 and $65 for oil right now feels and seems about right.
The other thing is this. Xi and Trump this week at G20 meeting, June 28th and 29th in Japan. Do you expect a deal, and do you expect the market is expecting a deal, Kenny, or are we just looking for not sort of an implosion of the sort of the reconfigured talks that we seem to be coming into?
Right. So I don't expect a deal at all, right? I don't think they're going to come up with a deal and sign, seal, and deliver it at all. What I think the market is expecting, though, is movement. They want to see that the two have come together. The two are trying to put their differences aside and want to work on a deal. That will be what the market expects. If we don't get that, if we get, Trump stamping his feet and walking away and threatening to impose more sanctions, then you could see the frothiness in the market, as Aaron Gibbs told us. You could see that kind of turn very quickly, and we could watch, and we've seen how quickly the market can turn. One way or the other, I think that the market and investors are expecting to see movement ahead and not a specific deal, because I think there's too much to talk about.